All right, welcome back. Oil popping today. Look at that, more than 4%. Bill Baruch joins us now. He's making some big moves in that space. So it's good to see you. Thanks for coming on and telling our viewers what you're doing. So you bought Shell and you sold Pioneer, given the news of the week. Interesting. Tell me why.
I did. And you know, I love this stock. I think there was a stretch of 3 appearances where it was my final trade. They have great assets in the Permian, but Exxon knows that. Exxon's buying them, and the buy price is $250. You know, I might be worried that something could fall apart here, and then you get maybe a 10, 15, 20% drop. What I'm looking at here with Shell, we're very overweight energy. We're upwards towards 17% right now, but I wanted to get another name in there. And European oil majors trade at a deep discount to American and the U.S. ones. But what I see here is an absolute breakout in Shell, and they have just terrific assets. So I think this is a really nice trade here where you could get a valuation catch-up, too.
Okay. What about Pioneer?
Well, Pioneer, I mean, right at 250, Exxon's buying them at 250. What's the risk here? I mean, yeah, we could trade around 250. You could trade at a premium. I love the name, but at this point right here, I'd be a little worried that we could see a 10 or 15% drop, you know, just because the deal sort of falls apart.
Yeah. And then you bought AMD, which is interesting, too, because you had sold it in mid-July. So why are you buying it back?
Well, we never didn't dislike the name. This was more of a seasonality trade for us, where we wanted to raise cash and give us some flexibility going into the negative time of year. And we timed that pretty good on the exit with AMD in the middle of July. Along with that time, we sold Tesla as well, and just raised a tremendous amount of cash. What I'm seeing here is, from a technical basis, AMD has now moved out of a nice wedge pattern and back above the 50-day moving average. But the real thing here is the point is that there's an AI catch-up trade. And I think that AMD could really catch up with NVIDIA. Now, I don't think that everybody really wants one major GPU dealer. And that's really, I think, where AMD is going to come into play. Not only that, their software is starting to catch up with NVIDIA. And that was a big point that I made in the first half of the year, that there is no, NVIDIA is number 1, there's no number 2, no number 3. Maybe AMD's number 3 now with the AI software and allowing people to really open the door and utilize their GPUs. What this is, though, is I'm looking at, and this could be a tough road, but what I'm looking at is this could really be priced in. This multiple and the expectations could start to be priced in here in the coming months or coming quarters, and I want to be there for that. I
appreciate it, and I appreciate you coming on and talking to us about it today, Bill Baruch. We will talk to you again soon. I want to use the segue, guys, of the AMD buy to do our calls of the day. Lam Research, Applied Materials upgraded to buy at Needham today. Lam's target to Lam's target to 800, Applied Materials to 180. You have both of these in the Joe T.
Might be a little bit rich on the price target, but these are 2 companies that really define the environment we're in right now, where I believe the viewers should be focused on companies that have the revenue here and now, the free cash flow generation right now. And that's exactly what these 2 companies deliver. They are the purest definition of quality. That's the direction of what you want right now in a market that's bifurcating companies based upon what their leverage exposure is.
Jim Lebenthal.
Sir.
What about these names? I mean, you have a bunch. You don't have these specifically, but you do have a bunch of chips. And by the way, Deutsche Bank today says, and I'm quoting from their note today, we believe selectivity remains key, focusing on names with de-risked cyclicality, co-specific catalysts, and exposure to strong secular trends. Now, NXPI on their list. You have that one. NXP.
Yeah, so interesting story there. That's a stock that has 50% of its business come from the automotive region. We know what's going on with the strike. We know what's going on with production, and that's actually made this stock cheaper than it should be. I do believe at some point this strike's going to have to get settled. When it is settled, we know that inventories on dealer lots are low. We know that average age of cars are extraordinarily high. Put that together, there's going to have to be car production, and that's going to drive NXP's business. I like the setup here. It's extraordinarily cheap for what I see ahead of it in terms of automobile production.
How about you, Bryn?
Yeah, I mean, I would say I own NVIDIA, and I think Jensen has delivered not only in execution, but in performance. I think number 2, I think Lisa Su is amazing. So I would put NVIDIA, AMD, and Lam Research. If I were to add 2 more, I would add AMD and Lam Research. And so I think what's interesting about this space, what I wouldn't be doing is buying the SMH. Sometimes you can buy a sector, sometimes you can't. There's such a dispersion of what these individual companies do, how they execute, and the performance. I would do the work and buy the individual names versus the ETF in this case.
Okay. Well, speaking of tech, ARK Invest CEO Kathy Wood will be on this program on Monday. We're very excited about that, 12:30 p.m. Eastern Time.